If you can master this SMC scalping strategy, then you'll be able to take high risk to reward trades, bank consistent profits, and trade just a couple of hours a day. In this video, I'm going to be sharing the step-by-step plan that I use to take this 7 risk to reward trade on euro dollar during the London session. And this is the exact strategy that hundreds of others just like yourself have used to go on and get funded and start taking consistent payouts. Okay, so here we are on GBP USD 15-minute time frame on Tuesday the 9th of April at 7:45 a.m. London. Now this is 15 minutes before the session is about to begin. So I'm going to walk you through the exact trade step by step and my thought process behind it. With that being said, let's go ahead and get into it. Now, the first thing and the most important thing, especially with a scalping strategy, all you actually need to understand is what is price going to do today? That is it. What is my session window, my 3-hour session window going to produce today? So step number 1, you need to have an intraday bias. You need to have a 15-minute time frame bias, and that bias needs to be based on market structure. So you need to understand before you sit down, are you bearish, meaning price is putting in a continual series of these lower lows, lower highs, lower lows, lower highs, and you are just simply trading this pullback continuation and trying to short in this area in here? Or are you on the opposite side? Are you actually bullish? And are you looking to play long continuations from areas like this to play higher prices? And your job is to get involved in these areas in here. So you just need your bias. So I'm going to walk you through is how I was able to take my bias on this specific day using the 15-minute time frame market structure. Now we're going to come back because we're going to have to understand where we have been to understand where we are going. So our most recent and clear market structure actually comes from Friday the 21st of March. And what you can see is here we have our swing high, here is our swing low. We actually end up getting a breaker structure, so price is heavily bearish, also heavily bearish in the higher time frames. And then this ends up being our market structure. We have up here our swing high, and we have down here our swing low. And now it's pretty simple. Because we are bearish, what are we expecting? We are expecting lower prices. So what we're going to do is we're going to draw a box from the low to the high of our range. I'll make it a little bit more visible for you all. And we're going to draw this across here. Now, this range right here represents our trading range. And it's pretty simple. Because price is bearish, what you should expect after this low is put in is some sort of pullback into the premium area of this price leg into some sort of area of supply, and then a continuation sell-off short. And you can see here I have mapped out in green right here. This is actually my London window. This is my London trading session. And so on this specific day, what would I be looking for? I would be looking for some sort of confirmation when London opens, some sort of liquidation, and then sign to go short. And you can see exactly what happens. And the next day, because I was still short during my London window, I would be waiting for some sort of manipulation to then trade lower. And that's exactly, again, what you get. So what we see here is this is our trading range until it gets broken. And if we just draw it across, you can see that this range did continue and go on for a while until eventually the lows down here were actually taken out, right? This gives us our break of structure. So we are continuing to be bearish. Now we need to identify what is our most recent swing point. So we have our swing high, because this high right here is the furthest price pulled back before putting in a lower low. So if you just looked at it like this, for example, you would see that this is the high, this is the lower low, lower high, and now this right here is our lower low. So those become your swing points. So we're going to map out this as our swing high and this as our swing low. And if price is to continue bearish, what's going to happen? Price is going to respect this high and continue trading lower. But in actuality, when you come in, what you'll see is after price put in these lows, we had this aggressive buy to the upside. And what did it do? It actually ended up breaking structure and giving us a change of character. Now, the change of character is simply put the first phase of the market reversal. So in this example, we were bearish, trading bearish, and now we've had a higher high. The market has put in a higher high. Buyers have took control of this market. So with that being said, we're obviously now expecting higher prices. So now we understand our current trading range. And our current trading range is this low down here, all the way to this high up in here. So we are bullish, and our directional bias, our intraday bias, when I'm coming into my London session, this is exactly what I'm doing. And I'm concluding that we are bullish. This is my swing low. This is my higher high, swing high. This is the area of price that I wanted to see price respect. Price respected it. And not only did it respect it, but it actually gave us another leg of confirmation. So you see, when price is trending in a certain direction, let's say, for example, price is trending bullish. What will happen a lot of the times is as price pulls back like this to make its higher low, price will have this internal structure. This internal structure will be a bearish internal structure because it's pulling back. However, the overall structure is bullish. So look out for this. Look out for when you see this internal levels in here that are putting in lower lows and lower highs. And eventually, at some point in time, you'll get this right here. This right here is your confirmation that price is ready to do this. And then these are your buy opportunities into where? Into this high in here. So that is the simple premise of the strategy. It's a very, very easy to follow along strategy. Make sure you're pro trend. Make sure you have a clear read on your bias when you come into your session. And then from there, I'll walk you through the exact entry. So if we see and zoom in, you can see this is Tuesday, 9th of April, and it is 7:45 a.m. So what am I looking at? Step number one, my bias is long. I want to trade price higher, and I want to buy price into this high right in here. That is my bias. That is my most recent draw on liquidity. And you can see right here, this is the internal structure. You can see price was able to put in this pullback, higher high, lower low, lower high, lower low, lower high, lower low, right? And then what happens? This high gets broken. So it goes higher high, higher low, ready to go and put in a higher high. So now that's the exact picture that I have. I now come into my session and I look at that and I go, well, it's quite simple really. Price is going to likely respect this low and I want to buy in my London window. So how can I identify an opportunity where I can buy? Because price is already bullish. I just need to find a way to get in. And so this is the exact model that I use. And it's pretty much like this. What we want to see is some sort of liquidity range created. And then we want to see a liquidation in the opposing direction. And then we want to see a lower time frame confirmation. So a lower time frame confirmation will be lower low to higher high. And then we want to get in on this lower time frame confirmation. And then we want to get in up here. And so in this example, this is the daily cycle. What we have here is we have Asia session, right? So mapped out in blue, just right here, we have the Asia session. Now, everybody knows, and if you don't know, you're about to find out, the Asia high and the Asia low is one of the most manipulated and liquid areas of a price range ever. A lot of the times you will genuinely see the pattern, go and test it for yourself, where one side of Asia gets manipulated before the other side of Asia gets manipulated. This is a common known thing. I mean, even if we just look at the exact day before this trade, we look at the blue box right here, we have Asia low, and we have Asia high. What happens? London session opens and it manipulates into the lows of Asia low and then immediately reverses and takes out the Asia high. And so what we need to do is, because we have a bias, we need to wait for the Asia session to be manipulated on the sell side. So we want to really be buying in and around below this Asia low, which is represented as this trading range right here. So what we're waiting for, because number one, we have our bias, we are looking for longs. That's step number one. If you don't have a bias, you don't have a trade. Number two, we need to identify our liquidity pool. And our liquidity pool is right here. So we're waiting for these lows to get manipulated. And then step number 3 is our lower time frame confirmation. So you see, we drop down now to the 1 minute time frame and we take a look at what price looks like upon delivery. Here is 7:59. So now it's 8. So London has officially opened. And what we want to see now, we want to see price delivering in a certain direction. Number 1, we want to see it manipulate below these lows. And then number 2, we want to see it shift bullish. So let's play price and see what actually happens with price. So you can see price has already taken out the Asia lows, only very slightly, but nonetheless, it has taken it out. So what happens? Price continues trading lower. So now we've had a nice run on the Asia lows. And so what you're waiting for at this point is, as you can very clearly see, sellers are obviously in control, right? We're expecting that price will continue trending in this direction until hopefully at some point it shifts and buyers take control. And considering that in this scenario, we are buyers, we want to wait until we are confirmed that price is going higher. So let's continue playing price and reading the story behind why price is doing what it's doing. So what do we see here? We see that price continues. So we have high, we have lower low, we have lower high, and we have lower low. So once again, sellers are remaining in control of this market. We need to see a break and close above this. This right here, a wick, is simply nothing other than just a liquidation of price. When you see price wick a high or wick a low, you can be very sure that price is likely to now reverse in the other direction. I mean, let's just take a look at this for a moment. What do we see? We have a low down here. It gets liquidated and then trades off in the opposing direction, right? Again, same thing here. What do we have? We have these equal highs in here. They get liquidated with a wick and then they sell off, right? This right here is a break of structure. Therefore, you can probably expect it to continue trading lower. So we've had a liquidation of this high, another liquidation of the high, and then exact same pattern again. We have a liquidation of both of the highs. And then what's going to probably come next? There comes the sell-off. And then what do we have? So we end up getting what? A liquidation of the lows. So as of right now, we have failed to break and close below this low. So if price potentially looks like continuation higher, well, that makes sense because we've just had the liquidation. We've had the liquidation lower. And so now what do we want to see? We want to see this high right here get broken. If this high gets broken, that has now confirmed to us that the 1 minute trend has shifted from bearish to bullish. And considering that our bias for this day is bullish, all we're waiting for is buyers to step in and take control of this market. And then we are good to go because we believe the buyers are in control anyway, just on a 15-minute time frame. So we'll play the next candle, we'll play the next candle. Okay, and there you go. There is your difference. That is a break and a close. And so that right there becomes our change of character. Price has obviously shifted from bearish to bullish. Now it's confirmed that we are ready to buy. And so if we just zoom out for a second, what do we have? We have an overall, right, an overall bullish trend, right? We're in this overall uptrend very clearly. We've had our liquidation of very important lows. And now we've had our lower time frame confirmation. So now we are officially ready to buy. All of our strategy checklist ticks off. And now we are ready to buy. So where are we buying from? Well, we want to be looking at the range, right? The accumulation of orders that essentially caused price to trade out. So we just want to map out this range in here, just like this. Right, this kind of momentum candle, price ranges and then continues trading higher. That is where we're expecting that price will likely come back to. So that's where we're going to put our order on. And instead of trying to be smart and having a 2 pip stop loss, we're going to actually be careful and, professional, because ultimately we care about staying in this position. So we're going to put a 4.5 pip stop loss on it. Still a pretty small stop loss, and we're going to put it below the low in a place that actually makes sense. But where are we targeting, right? We're actually going to be looking for our M15 target, right? So we just zoom out for a second and come here and we go to the 15-minute time frame. What is it that we're looking at? Well, we're already bullish. This is already the high that we are expecting price to take out. That is our bias for this specific day. That is our bias for this specific session. That is the price where price is most likely drawn to. We just need to figure a way to get in. So what did we have? We had our internal shift, great. We had our pullback, we had our internal range, we had our liquidation of anyone trying to get in early, then we had a liquidation of anyone trying to get in longs early, and now we're finally ready to go. So we'll take this and we'll put it at just a 1 to 7 risk to reward, drop back into the 1 minute time frame, and then let's see this trade play out and how it would be managed and all of that things in between. So let's see. So price tags in. Okay, cool. Let's pay a little bit attention to detail. So price has tagged in. Okay, we've made some relatively equal lows in here. Okay, we have a bunch of liquidity to target on the way up. This is all liquidity. You can quite clearly see it. We have, equal highs across here. We have equal highs across here. We have relatively equal highs across here. So you can see there's a bunch of buy-side liquidity. The sell-side liquidity has already been taken. So there's no need for price to trade lower. Price now wants to trade higher into the buy-side liquidity. Okay, another aggressive candle out. Awesome. What does that leave? Again, it just leaves more liquidity. So maybe you could be anticipating some sort of sweep into this zone. So that therefore we wouldn't be looking to go to break even yet. So trying to play price out. Okay, price seems to have respected this area of demand. Now price has ran into these lows. So these lows have now officially been liquidated. So we can take them with a wick. And then let's see what we have. So we can see price has more equal lows. So when you're seeing price come into a little bit of drawdown, yeah, sure, it's not great. It's not nice to watch, but you can just understand why price is delivering the way it's delivering. And then what do we have? Have a wick of those lows. And then price has taken off and taken out the highs. Notice the attention to detail, right? What did we just speak about? When price wicks, it's just a liquidation. Wick, reaction. Okay, create more liquidity. Wick, reaction, right? So let's see how price develops here. What I would want to see in order to go to break even is going to be some sort of pullback and continuation, just so I know that this area of price in here is actually clear. Because right now there is, a high probability that price could just mitigate this and then continue. So what I want to see is price come back into something like this, so it has no reason to collect this order anymore, because if it shoots off, worst case scenario is going to come back to here, and then I can go to break even logically, not based off of emotion or, just random decision making. So there is our kind of pullback. So the moment that price breaks this high now I can roll my stops to break even. Why? Because the reality is there's no need for price to come all the way back down here at this point. I mean, if price is going to come all the way back down here, it's probably going to end up running through the stop loss, and therefore it's better to take a break even. So that the logical place that price would go is in this range right here, from this high to this low. Price could have some sort of pullback and then continuation, but it wouldn't make sense to break this low anymore. That is our current order flow. So we'll just continue playing price. You can see what happens. Price pulls back into our old trading range, remitigates the trading range, and then breaks out. So again, if price is going to pull back, it's going to pull back probably into this level in here. So price is running nicely in profit at this point. I mean, if you had a $200,000 FTMO account, that's 7R, 1% risk, you're looking at $14,000. It's not bad. So what do we have in here? Again, what happens? Price pulls back into the trading range. Notice this consistently occurs with price. Price will oftentimes pull back into the trading range, the prior trading range, right? We have a range, continuation, pullback, where? Into the range. Then we have a range, expansion, pullback, where? Into the range. And so price is going to pull back, it's going to pull back into this range and then continue. Let's continue playing price. And there you have it, full take profit for a 1 to 7 risk to reward.